Tuesday, May 11th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at why the only way to stop inflation, and by now I hope most of you know what inflation is. If you don't, just look at these definitions here. Inflation is not CPI, so the only way to stop it is for central bankers to raise interest rates and to start quantitative tightening. But the problem with that is if they do it, they bring down the whole system. They will completely annihilate their own institutions, governments as well, that help them stay in business. But back in 1980, it was possible for Paul Volcker to raise interest rates, let interest rates go up to 20% in order to save the dollar, because that's what the Hunt brothers and others were doing. They were getting out of a currency that was dying. Even as recently as 77, 79, the U.S. Treasury had to issue the Carter bonds, their treasury bonds denominated in Swiss francs or Deutsche marks. So it wasn't surprising that the Hunt brothers and others, because it wasn't only the Hunt brothers that accumulated physical silver, and they did it through the COMEX and other means as well. And the Hunt brothers started way before 1979, 1980. They started accumulating silver in 73, 74. They had a huge fortune, the Hunt brothers, from their father, H.L. Hunt, who was one of the wealthiest men in the world in the oil business. Started out, I think, with $100 and was a gambler and made $100,000. And from there, he expanded into the oil business in Texas. So that's the story. They couldn't buy gold at the time in the early 70s. They knew that when Nixon closed the gold window in 1971, that they had to protect the wealth they had. They had a lot of revenues from the oil business, so they started accumulating silver because gold, of course, was illegal at the time for Americans to buy. So that's the background of why Paul Volcker had to raise interest rates. I'll show you an article about the Hunt brothers. I'm not going to go through the whole thing. This is for maybe another day for us physical stackers. It says Hunt brothers demanded physical delivery too. And this article was written in 2010. And I've spoken about it many times. And I'm going to put a link to it below in the description. You can go through it. But what interested me in this article was this part. It says, by March 14th, that's 1980, silver was down to $21 an ounce. Paul Volcker had raised interest rates and the dollar had firmed up. International metals still held 60 million ounces of futures contracts. Their margin calls on some contracts amounted to $10 million a day. So I'm going to stop it right here. So you see, Paul Volcker could raise interest rates to defend the dollar. That was the last resort. He had to do it. And Paul Volcker is an interesting guy because he was involved also in Richard Nixon's decision to end or suspend temporarily the convertibility of the US dollar into gold at a fixed rate of $35 an ounce. That was at Camp David. I think they were holding the talks on that weekend. And it was on the Sunday, August 15th, that they decided to pull the plug on the Bretton Woods system. But Paul Volcker was an advisor. He was Under Secretary for International Monetary Affairs for the Treasury or something, some title like that. And he even asked the advice of John Exter, who used to be a central banker, but was retired at the time. John Exter wasn't directly involved, but John Exter, I've read John Exter's work, and he said that Paul Volcker actually contacted him and asked him what they should do. And John Exter said, you've got a few choices. One of them is to raise interest rates. The other one is to revalue the price of gold, i.e. default, partly default as well. And then the nuclear option that John Exter told Volcker about was to suspend convertibility. And unfortunately, that's what they did. So Paul Volcker goes back a long time. He was not just came into the Fed chairmanship and decided to do something out of thin air. He knew that this is what they should have done probably in 1971. And they kicked the can down the road. And by 1980, rates had to go up to 20% to save the system, to save the Federal Reserve note, really. It wasn't really the United States dollar, because the United States dollar will always be, under the Constitution, a weight of silver or a weight of gold. And but to the debt now, and to interest rates, and about today and the inflation. Well, back then, the debt to GDP ratio of the national debt was about 35%. The debt had been written off through a lot of inflation after World War II. And the national debt, for example, in real terms, was under $1 trillion back in 1980. So yes, there was a double dip recession, I remember, in the early 80s. I think it was a recession in 1980, and then it recovered in 81 or maybe 79 to 80. But it wasn't a great period for the economy, but it set up the path for the 1980s, where the economy was able to move ahead. You had a period of what they call disinflation. The inflation started moving down. So nowadays, the debt is so humongous that the only way to stop the inflation, and it's not going to stop, because if they stop, the whole thing implodes. And the only way to stop inflation, like I said, is to raise interest rates. We've had zero or near zero rates since 2008. I mean, we're going on for almost 20 years. If you consider that Jay Powell and the people at the Fed are saying that rates are going to stay near zero at least to around 2024. I mean, that would be 20 years of zero rates. It's madness. And there will be a huge crisis. I don't know when it's going to be. It's going to be like 1979, 1980, where rates will have to rise. Everything will collapse. It will make the 1980 crisis, because it wasn't just a silver crisis. It was a dollar crisis. Seemed like a picnic. So there's an article here which I spoke about last year, back in November in one of my videos, but it's very relevant still. And it talks about the amount of debt that the world has. And it says pandemic fuels global debt tsunami. And that's why they won't be able to stop inflating. And that's why you need to hold on to your hard assets. Get out of paper, get out of Dodge. Says governments and companies took on $15 trillion more borrowing in the first 9 months of 2020, says IIF. I'm not going to go through this whole article. I will put the video I did about this up in the cards and in the description. But just to give you an idea of how the debt has increased since 2013, for example, debt to GDP of the world, global debt, was around 310%. And we're now, I think, around 375%. But even worse is the advanced economies, what we call the West or the G7. It says debts in advanced economies rose by more than 50 percentage points this year. So this is in 2020, 50 percentage points to hit 432% of GDP by the end of September. So this is increasing. I don't know where it is right now. It could be probably near 450%. And it says the US accounted for nearly half of this. Its debts are set to reach 80 trillion this year from the 71 trillion at the end of 2019. And of course, this debt is not just government debt. It's also corporate, local, state debt, personal debt, all kinds of debt, right? So, yes, this gives you an idea that Jay Powell can't do it, Paul Volcker. He might be forced to do it one day when the dollar plummets and other fiat currencies plummet. And what will be the sign that they're plummeting? Well, it's commodity prices. It's commodity prices going through the roof. It's gold and silver spiking. Let's say gold having an up day of $1,000, silver going up $200 in one day. We're not there yet, of course. And the commodities, as I've said several times, are just beginning to go higher. So with that, let's quickly look at where the markets are this morning. It is 8:33 a.m. London time. We've got spot gold down just over $1 at 1834. The high's been 1839, the low 1831. So it's fairly quiet in the gold market overnight. Silver, of course, took a bit of a beating when the US came in yesterday. Frustrating, yes. But we just need to be patient. Patience is really important. And it's tough. But if you know the history and what's going on underneath the surface with the debt and with interest rates, there is only one way to protect the savings that you might have been fortunate enough to accumulate through your working life, be you, I don't know, in your 20s, 30s, 40s, 50s, whatever age you are, if you have any savings, you should feel fortunate that you can still protect it right now. And you don't protect it by having it in this system. I would say that's my opinion. Not giving advice here as usual. So silver this morning is at 27.34, up about 4 cents. Range has been 27.11 to 27.50. I think the high yesterday was 27.90. But I'm not concerned about silver at all. I'm going to keep stacking silver. I'm going to keep supporting Wall Street Silver. I think they're doing a great job of trying to communicate with the public. Yes, their Wall Street Silver Reddit only has about 70,000 members right now, but we need to see that get up to 100,000. We need to see their YouTube channel also improve from 10,000 subscribers, and I think they will. And that's why you should tell your friends and families and colleagues about Wall Street Silver. I've seen that they've put billboards now all over the United States about inflation and investing in silver. So that's a really good thing. And we don't want to get caught like the Hunt brothers. They were an easy target because it was one of the richest families in the world tried to buy a lot of silver. They got caught. But if us ants or silverbacks or apes in the millions start buying the physical thing and don't go through their paper game, we will very easily defeat them. So what about the stock market? Yesterday was an interesting day for the stock market because the Dow was up triple digits most of the day. S&P and NASDAQ were down. And then in the last hour or so, the Dow just dumped. And even though it finished only down 35, it was technically not a good finish. The S&P yesterday finished down 1%. The NASDAQ finished down 2.5%. I was thinking with the Dow almost at 35,000, if you get like a 2% correction, which used to be normal really, nothing really to write home about, Well, nowadays a 2% correction would be a drop of 700 points. So you can see how the higher the market goes, the more dangerous it becomes, I think. Yes, it's only a 2% drop, but psychologically, you're going to have the headlines, well, Dow drops 2.5%, 1,000 points. That's not going to give confidence to investors, I think. So we need to keep an eye on that. So right now, the Dow future is down 130 points, which is only 1/3%. The NASDAQ continues to lead the way lower. It's down 1.2% or 162 points. S&P 500 is down 2/3% or 28 points. What about the currencies? The pound had a really weird big day, up yesterday. I don't know what was going on there or what's going on there. The pound trades a little bit like a emerging market currency, I would say, very volatile. So just as it went up a lot yesterday, it can go down a lot, maybe tomorrow or next week. Who knows? It's not a stable store of value at all, like all other fiat currencies. So right now it's at 141.29, up slightly. The euro is up 0.1% at 121.40. The dollar is unchanged versus the yen at 108.89. Dollar yuan is unchanged at 642.60. High grade copper came off the highs. Commodities got hit a little bit yesterday. But as I said, they're not going to go up in a straight line. But you can bet they're going to continue higher in the next year, 2 years, 3 years. That's unless they start raising interest rates and actually doing quantitative tightening, which is actually the Federal Reserve selling all their bonds. I mean, I don't see that happening at all. I see snow in Rio de Janeiro, Brazil, coming before that happens, actually. So impossibility. So yeah, high grade copper right now is up, but it's at 475. It's up 0.8%. Yesterday, I think we got up to like 487. Crude oil, WTI, is down 0.75% at 64.43. So yes, this pipeline thing could be a precursor to more false flags, if you want to call it that, to put it into people's mind that you're going to have hacks and disruptions. I think the powers that be are running out of things to scare us with. I mean, Klaus Schwab of the World Economic Forum last year started talking about hacks as well, aside from viruses, of course, and pandemics. He said it could make the crisis last year look like a picnic. So I think that's the idea here. They're trying to set us up for some kind of power grid problem, electric problem. So you need to be aware of that, I think. So to finish off, let's just see where the bond market is. The 10-year yield has crept up. We're now at 162, the 10-year yield, up just under 2 basis points. So there you go. If you enjoyed this video, make sure you hit the like button. Please share far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.